Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at the 9-month performance of two insurers in the non-banking finance sector, Sagicor Financial Corporation and Guardian Holdings Limited. Not surprisingly, both firms would have had a very challenging third quarter performance in light of the very significant and unprecedented events which occurred in September, namely the two hurricanes Irma and Maria. The loss of life and property was indeed significant across the islands, and this has filtered through to financial markets. Let's first take a look at Sagicor Financial Corporation. And for the 9-month period ended September 2017, Sagicor recorded fully diluted earnings per share from continuing operations of $1.03, a 1 cent decline or 1.2% decline from the 9-month period of 2016. In terms of total revenues, it was a positive story where there was a 7.1% increase, moving from 5.7 billion TT dollars to about 6.1 billion TT dollars, whereas benefits and expenses increased more than proportionately by about 9.3%, from around 4.9 billion to just around 5.4 billion dollars, and much of this was attributable to claims arising from those two hurricanes. Overall, net income from continuing operations declined 11.3% from $596 to $529 million. The revenue story for Sagicor continues to be a positive one, however, whereas we can see that over the past 4 years, total revenues have grown just around 6.5% on average to the current 6.1 billion that we would have seen in the 9 months of 2017. On another positive note for Sagicor, there has been a relatively even split and consistent split between what is earned from insurance activities through net premium revenues and what is earned through investment and other income. And it's typically been a relatively stable 40-60 split between investment income and net premium revenues. In terms of valuation for Sagicor, the stock does provide investors with significant value, trading at a price earnings multiple of around 6.4 times, and offering a trailing dividend yield of around 4.2%. And also for investors who look at this metric, a market-to-book ratio of just around 0.6 times versus the industry average of around 1.3 times. So on the basis of relatively stable earnings, even amidst a significant insurance event and good attractive valuations, Bourse maintains its buy rating on Sagicor Financial Corporation. And turning quickly to Guardian Holdings Limited, for the 9-month period ended September 2017, earnings per share from continuing operations was maintained at $1.10, so a relatively flat performance, which is quite commendable given what had occurred in the third quarter of 2017. Net income from insurance underwriting activities took a very sharp hit, declining 47% from $375 million in September 2016 to just around $196 million in the 9-month period ended September 2017. And again, much of this was attributable to expenses related to both of the hurricanes, which would have affected the Caribbean region. Net income from investing activities, however, did pick up a lot of the slack, with a 21% increase, moving from $730 million to just around $889 million for the 9-month period, increase of $158 million, and overall profit from continuing operations was pretty flat at $254.9 million. In contrast to Sagicor, the story for Guardian and its breakdown of revenue is somewhat different. There has been a trend of increasing reliance on investment income, moving from just around 50-50 split in the 9-month period of 2015 to around that 80-20 split, where investment income has accounted for the lion's share of revenues. This trend, while positive in a rising market, could present some challenges should insurance activities remain constrained in an event where markets correct and investment income isn't as prevalent. Again, relative to the market, Guardian Holdings does offer some value at a multiple of 9.3 times price to earnings, which is still below the sector average of 12.9 times, and a healthy trailing dividend yield of around 4.5%, again above the sector average of 3.4%. Now, on the basis of a relatively muted insurance activity net income from insurance activities and a declining reliance on that particular revenue source, But tempered by attractive valuations, Bourse maintains its neutral rating on Guardian Holdings Limited. That's it for this week's edition. For more information, give us a call at 226-8773 or 2-BOURSE. Email us at invest@boursefinancial.com or visit our website at www.bourseinvestment.com. Thank you for watching. This has been the Bourse Report. Have a great investing week.